Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we entered the day, it was pretty quiet, and then all of a sudden, for the first few hours, you had a little bit of a pullback in the indices. A lot of people started calling game over, get out of the market, here's the top. Same type of people that have been calling it every single time we get a little weakness. And I know that the market's had a nice move since the June 4th lows, but until we break this upper level, I think stocks are really working out. And I've been trying to point out that there are three different ways to approach the market, which I want to go over in this recap. As obviously as an investor, holding things long-term, stocks you like, stock selection that you hold for multi-years, multi-months. A swing trader, you're holding for a short-term time frame. Sometimes it could be 3 days, sometimes a few weeks. And then the active cash flow trader, if you don't want to put on risk at certain times in the market where you just want to intraday trade. So, there were two stocks that I outlined a lot in the past 3 weeks that have been acting very well, since earnings, and one of them being Google, and obviously another one being Apple. First, I want to just quickly show you the chart of the S&P, and then I'm going to go over those two stocks, different time frames, how you could have gotten involved, how you could have entered, held, felt comfortable, and hopefully you'll learn something. So if you look here first at the chart of the S&P, or the SPX, this was looking back, I'm not going to go through the whole song and dance, but this is when, IBD put us in market correction, right when we had this head and shoulders top, broke this neckline, hovered below the neckline, measured move from here down, about 100 handles. That took us down to here. Okay, let's fast forward. That was then, this is now. Here's your low. This low took place on June 4th. Here's your commitment to the low. And then ever since then, we've been holding higher. I've talked about this, this ascending channel that stayed intact the entire way. And now, I've been trying to point out this rounding cup and handle type pattern. Cup and handle patterns are unbelievable bullish patterns. What they do is, they after a huge move like we've seen since October 4th lows, they give institutions a way to accumulate stock. So, if you want to see real quickly, the Fibonacci retracement from the low here on October 4th to the high here, right? Remember that high here? All we did is retrace 50%. So you go across, that's what we broke out from the beginning of the year. That's what we tested, retraced 50%. Dip buyers came in, pow, cup and handle, and this is where we are right now. Look at this high-level consolidation. So you want to talk about high-level consolidation? I'll talk about it. First, let me remove some of these lines here so you can see it a little bit closer. Here you go. We've been talking about, I've been putting the 15-minute chart up, trying to just keep people in this trade because between the media, between all the bears out there, it's definitely hard to hold. And, we basically had a big move, if you remember, on that jobs day that was powerful and igniting. And since then, we've held above it. For the last 6 days or so, we've been holding above, you probably are sick of me saying it, 1388 to 1394. Good areas to cover some shorts in your hedge, and put on strong stocks. But overall, here we are holding higher. We haven't had any momentum above 1407, but it does feel like it's coming soon. And if you're rolling up shorts and you're not playing the long side in certain spots because you think there's no way we can go higher, you're going to have a lot of decisions to make right around here. This is 1407. Then you have here, this is 1415, and then you have the highs. So first things first, to close above 1407, and you're probably going to see another round of short covering to at least this level, and it does seem like it could happen soon. I've talked about the 8-day catching up. Well, it just caught up. The 21-day is moving higher, and we're not even overbought. To be honest, I think I haven't checked the oscillator, but I do think it's almost. I got to check it before I say it. But anyway, so if you come back to me, overall, the S&P is doing a great job absorbing a lot of bad news, a lot of growth slowing news, a lot of news that could definitely have hit us, but the price action is showing that the market's taking in strides. The bears are saying it's stalling. I'm still on the digestion camp. So as far as the stocks that I've been focusing on good setups. I've been trying to, be involved in a few things for a swing trade, a few things for just cash flow, and that's been working out. So first thing I want to go over is Apple, because Apple is something that I trade every day. It's been my bread and butter, and ever since that negative, earnings report, it's been a very calculated trade, almost too calculated. I've been tweeting about it, talking about it, guys, on the virtual trade floor. I've been holding it. It's been green for the past 2 weeks. That meaning I'm long it, showing people, trying to keep people in it. Besides trading around it. So if you go to Apple, here's a chart. This was the earnings report. This was, and we actually talked about not taking a position into earnings for the first time. Here was your gap down. It had a few days of consolidation. For a Q trade, I tried shorting it a few times through this 570. It never broke. And then here is your trigger. This trigger above 580.85, which was right here, or 580.80 was your first entry. It gave you a beeline trade, 3-up days, showing you power, showing you that they didn't care about this gap down. This gap down had absolutely no power. Okay, I actually missed this 3-day trade. I was training, I was out of the office, and I just wasn't involved. I then shorted right here, okay, as on this 4th day, it got a bit too extended. So I said, you know what, I'm going to short some, and that actually got me on the right side of it, because then, covered into the gap. And then on this 80-20 trade, when it went below 602.72, went as low as 600 and came back above, that's when I initiated my swing long. I wasn't upset that I missed these 3 days. I wasn't upset that I didn't have perfect prices. I said, you know what, I need to be involved. I love this stock. It should make new highs moving forward. Here is your entry. So if you go back to that spot, okay, that was the gap that held. So that showed you commitment to those upper levels. So that was your swing entry if you didn't get the perfect prices at the 580.80. And then everyone knows we were talking about 617, 618, 620-ish, that area as a cash flow buy, a spot to add to your swing trade for cash flow, a spot to get to tier 2. If you were in from 603 tier 1, you're adding through 617 to 620 to your tier 2, and then you take some off as it goes to 623 to 625. You go back to the chart, you'll see that this was right here. I remember that day pretty methodically, okay? It tried to break above this area and really couldn't. I think I got a little bit longer on this one, and then right when it broke above this 617.98 high and it cleared this resistance zone, this was another nice cash flow entry. And we talked about it, we tweeted about it, and it wound up going to 624.87. So you're in tier 1. I added a little bit here. I got maybe tier 1.5, tier 2, and then into this move back to tier 1. Okay, and then, tweeted, talked about it, holding higher. As long as we hold 615 to 617, it's going to be fine. It consolidated. So, on Friday, went out long only tier 1. And then today, on the price point sheet, and we talked about buying above 623.50 to 624.50, and it closed at 630. So it went back from tier 1 to tier 2 as it broke through this price point, took some trades along the way, and back to tier 1 overnight. So that's how you could hold the tier 1 from this spot all the way to this spot and trading it along the way. And I'm going to show you on the intraday chart, if you came in flat today and you don't hold positions, because a lot of traders do that, you had a nice entry. Okay, first things first, you really had to be prepared with the sheet, knowing that this was your area and you had to trust it. Markets came in and held well, so this was your first move where it really took off. So a lot of money was made right there. Then it came back and retested it and held as the market came in and went negative and filled the gap. It did not. It showed you relative strength. And then if you held it all day, there was another nice little entry. Once it crossed above this area at 1230, it took out, just say, the high here of 628.45. So you had two different entries on an intraday basis. You had, first of all, the aggressive one, which a lot of guys in our office were aggressive. This was, number 2. If you took the trade and wanted to come back to it, and then once it got above this area, it then became a trade into the close with that as your stop. And PS, it closed at 630. So a lot of nice intraday action, a lot of swing trade action, a lot of macro action. Good job. Go back to the daily here, and it looks well on its way to, this is what, 631.33, and then the high here is 644, and then who knows. So a lot to like there. A lot of people don't like the equity market. Everyone talks about how the retail investor is out. I don't think so. I think a lot of the retail investors actually started to get smart and started to actively trade and approach the market without using a broker and without just giving orders to everyone else and taking accountability. But anyway, the other stock I wanted to show you was Google. Now I know this year in the beginning I loved it on a weekly, monthly. It was my high beta tech stock of the year besides Apple. It came out 2 bad reports, came in, held bigger support. A lot of guys got stopped out, okay, at the 200 day around 593. But we only started talking about it around 610, so big deal. You lost 20 points instead of holding through what was a pretty, I would say, stressful mess. But anyway, ever since the last earnings report, it started to act much better. We listed it as a 620 as a rebuy. Another buy area was 640, and today it closed really strong. You look here on the daily chart. Here was your earnings, gapped up, held above there, went sideways. This, in my opinion, was your tier 1. as it held above, the earnings gap up, which was right here. This was your tier 2 when it broke above this previous high here of 618.50, gave you a nice move, and then it's been a little bit choppy. Overall, you look at the pattern here, and it broke this downtrend that's been established since the highs here that was put in place at 670. Okay, if you look again at a macro level, a lot of institutions took the opportunity to buy Google and accumulate it in the 560 area after missing earnings here, after reporting earnings here, and it got sold. A lot of nice trades along the way too. There was some short action here. A lot of guys made money, but here was your time to switch gears, get back long here. Then some guys even got long in here about 640 and held through some of this mess. And now it's moving along really well. I want to show you the intraday chart because I came in today not long Google. Okay, if you come back to me, I had the Ironman on Saturday, and thanks for everyone's well wishes and support. It definitely helped along the way. It was a tough day, but it was also special. So I tried not to have a lot of risk. I've been holding Apple, and I've had 6-7 positions of short spiders, but I just didn't want to handle too much high beta. So today, I'm like, you know what? I'm going to look for my entry and look to make some cash flow and maybe put on a swing for what could be a powerful move in Google. So if you remember, Google got upgraded this morning by Morgan Stanley. It opened around 650, 651. Market went from basically flat, pulled in hard. Google did not go down. It showed relative strength. That's one of the rules. It doesn't fill the gap. You usually go in the direction of the gap, especially if it shows relative strength. So if you go back to the chart here, and you'll see, here's your 3-minute chart of Google. You had a gap up right here. So if you came in flat, which I did, you said, okay, I don't want to chase it. I want to see if they could sell it down. You had a quick move to the highs here, which was 651, and then it came back in, never even tested this gap. It never even came back to the open. Okay, look at the spiders in the first hour. This is 9:30 to 10:30. Watch what the spiders did in that hour. Spiders in that first hour went from basically opening, what was it, down a little bit, came up to retest versus the highs here. And in that same time frame, spiders went, from 140.80 down to 140.50, I'm sorry, and it broke even lower. Okay, so right here, if you want to look at time frame from 10 o'clock, just say, to 10:30, spiders went from 140.70 all the way down to 140.50 and broke lower past 10:30. What did Google do in the same time frame? Google, it pulled in a little bit, right, off the highs, not too bad, and then kind of went sideways and started to actually trend up between 10 and 10:30. So Google started trending up between 10 and 10:30 as the spiders between 10 and 10:30 were heading lower, showing you relative strength, saying this is not a gap to be sold. I think I tweeted saying holding above 650, they couldn't sell the gap. That's good for higher prices. Then you go back to Google. My entry for the long was right here for an intraday trade. It was right around 651, and I wanted to trade it through the high of the morning. That was my entry. I wound up leaving to go to get a nice little deep tissue massage because I'm sore from the Ironman. Came back, and there we were, 659. I put a nice stop in. I even talked about it. I said I'm going to put a stop in below, or so, it was like somewhere right around. I maybe put a tight stop right around there because I was playing it for a new high. I figured it wouldn't come back in. Pushed up, held higher, went again. A little descending channel here, and then went again. And P.S. it closed at 660. So even if you didn't take it, you haven't been carrying it, you didn't want the risk. You saw the gap up. Came in, gave you your first hour trade, showed relative strength. There's your entry, and now you have a nice move. And if you go back to the daily chart, it's looking great. You go back to the monthly chart, my goodness, look at this stock. It put a high in 2007 at around what? 750 when all it was search. Now it's got about 4 or 5 different businesses that they're monetizing. It's definitely undervalued in my opinion. Technically, it's going well. It's starting to break back above the levels that the reason why I loved it in the beginning of the year before it had those 2 reports. And I think this could have a monster run. At some point, it's going to test these highs. And in my opinion, I don't know when it happens, but it could be it could be before the end of the year. It's going to make new all-time highs, or it could be in the next 9 months. I think as a macro investor, stay long Google. As a swing trader, it's giving you entries. And even today, if you came in flat, there are multiple opportunities to make cash flow. Approach the market with a plan, and you can make money on any time frame. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.